Now regarding 80CCC, that is deduction in respect of contribution to certain pension funds. There is another section 80CCD, deduction in respect of contribution to pension scheme notified by central government. This is recently becoming popular because as per the restructured defined contribution pension system applicable to the new entrants to the government service, it is mandatory for person entering the service into central government on or after 1st January 2004 to contribute 10% of their salary every month towards their pension account. It is mandatory. So, a matching contribution is required to be made by the government to the said account. The benefit of this scheme is also available to individuals employed by any other employer as well as to self-employed individuals. In exercise of the powers conferred by section 80CCD subsection 1, the central government has notified Atal Pension Yojana APY as a pension scheme contribution to which would qualify deduction under section 80CCD in the hands of individual. Section 80CCD subsection 1 provides a deduction for the amount paid or deposited by an employee in the pension account subject to maximum of 10% of his salary. The deduction in case of a self-employed individual would be restricted to 20% of his gross total income in the previous year. Section 80CCD subsection 1B provides for an additional deduction up to rupees 50,000 in respect of the whole amount paid or deposited by an individual SSC under the new pension scheme in the previous year, whether or not any deduction is allowed under section 80CCD subsection 1. So, this is an additional benefit being proposed under the Act. Now, there is a limit under section 80C, 80CCC and 80CCD subsection 1 combined. This section is known as section 80CCC. So, the combined deduction is rupees 1,50,000, but under 80CCD subsection 1B, contribution to NPS notified by central government is rupees 50,000, which is over and above rupees 1,50,000 provided under section 80CCC. So, I hope that learners are now clear about the section 80C, 80CCC, 80CCD subsection 1 and the aggregate exemption limit which is given under section 80CCE as rupees 1,50,000 with an additional exemption of rupees 50,000 to contribution to new pension scheme under section 80CCD subsection 1B. Now, let us see the another deduction. Deduction in respect of investment made under an equity scheme under section 80CCG. Deduction under this section would be available to a new retail investor being a resident individual with his total income up to rupees 12 lakh for investment in listed equity shares or listed units of equity oriented fund in accordance with a notified scheme. The deduction is 50% of the amount invested in each equity shares or rupees 25,000 whichever is lower. But mind it that the minimum lock-in period suggested is 3 years. Now, let us come to another popular section which normally the SSCs claim, that is medical insurance, deduction in respect of medical insurance premium section 80D. That is a deduction to the extent of rupees 25,000 is allowed in respect of the premium paid to effect or keep in force an insurance on the health of self, that is the employee or the person individual SSC or spouse or dependent children or any contribution made to the central government health scheme or any other such scheme as may be notified by the central government. Now, a deduction of rupees 25,000 is allowable. an increased deduction of rupees 30,000 instead of rupees 25,000 shall be allowed in case of any person if it is a senior citizen or very senior citizen. Otherwise, it is 25,000 per annum can be claimed as deduction under section 80D for any premium which is paid to effect health insurance of the assessee or spouse or dependent children. Now let us see another deduction provided under section 80DD, that is deduction in respect of maintenance including medical treatment of a dependent disabled. The quantum of deduction is rupees 75,000, and in case of severe disability, that is person with 80% or more disability, the deduction shall be rupees 1,25,000. Section 80DDB provides deduction in respect of medical treatment, etc. This section provides deduction to an assessee who is resident in India, being an individual or Hindu undivided family. The deduction is available to an individual for medical expenditure incurred on specified diseases for himself or a dependent. It is also available to Hindu undivided family if such expenditure is incurred on its family members. The amount of deduction under this section is equal to the amount actually paid or rupees 40,000, whichever is lower, in respect of that previous year in which such amount was actually paid. In case the amount is paid in respect of a senior citizen, that is a resident individual at the of 60 years or more, then the deduction would be the amount actually paid or rupees 60,000, whichever is lower. But a higher limit of deduction of rupees 80,000 is allowable to the assessee if it is spent for a super senior citizen, that is an individual whose age is 80 years or more.